Have you ever wondered why owning a home feels almost impossible? What if I told you that in just 50 years, homeownership could be entirely out of reach for most people? In this video, we'll go over the factors driving housing prices sky high while wages are barely budging. You'll learn the harsh realities behind stagnant incomes, unaffordable mortgages, and housing solutions, as well as what you can do now to avoid being left behind. Housing prices have seen a dramatic increase over the past few decades. In 1970, the average home in the United States cost around $23,000. By 2020, that number had skyrocketed to $392,000. At first glance, this can be attributed to inflation, but when you adjust for inflation, the 2020 price should have been closer to $153,000. This reveals a staggering $293,000 gap that cannot simply be explained by economic growth or inflation alone. Historically, housing prices and inflation rose together, but over the past few decades, housing prices have massively outpaced inflation. This raises an important question. Why are housing prices growing so rapidly while wages are barely keeping up? Inflation impacts the cost of all goods and services, but housing prices have increased much faster than inflation alone. While the cost of everyday items like food and energy has increased steadily, housing costs have increased disproportionately. Complicating this problem is the fact that while inflation is natural in an economy, wage growth has not kept pace with the rising cost of housing. Inflation weakens your purchasing power, so even if wages rise slightly, they don't always mean you're richer than before. With housing prices climbing much faster than incomes, homes are becoming unaffordable for an increasing number of people. For example, while wages in the U.S. grew by about 800% between 1970 and 2020, wages only grew by around 20% during that same period. To put this into perspective, in 1970, a person could buy a house outright after saving 4 to 6 years' worth of income. But in 2020, it will take about 10 to 20 years to save for a house and buy it outright. The purchasing power of today's workers is far lower compared to the cost of homes, leaving them behind financially and creating an ever-widening affordability gap. Traditionally, financial advisors recommended that mortgage payments should not exceed 25% of a homeowner's gross monthly income. But with home prices rising much faster than wages, maintaining this ideal ratio has become nearly impossible for many. Take the $293,000 gap between the inflation-adjusted home price and the actual price in 2020. That's a nearly 60% increase in home prices, but wages have only risen by 20% over the same period. This makes it harder for potential homeowners to afford mortgage payments, especially in cities where demand is highest. Many buyers are forced to spend 30% or more of their income on housing, pushing them into financial struggle. In addition to skyrocketing home prices, mortgage policies have also become more complicated. After the 2008 financial crisis, banks tightened lending standards, requiring larger down payments, typically 20% of a home's price. This makes it difficult for younger generations to save up enough for a down payment, especially when housing prices are inflated. For example, in 1970, saving for a 20% down payment on an average house meant putting aside around $4,600. Today, that figure has ballooned to almost $80,000. As home prices continue to climb, saving for a down payment will become even more difficult, putting homeownership out of reach for many. While some mortgage programs allow buyers to put down less than 20%, this often comes with higher interest rates to offset the increased risk for lenders. A buyer who makes a 20% down payment might qualify for a low interest rate, but someone with only 5% down will typically pay more in interest over the life of the loan. Additionally, loans with smaller down payments usually require private mortgage insurance, further increasing monthly costs. Another factor contributing to the housing crisis is shifting social norms. People today are delaying life milestones like marriage, starting a family, and homeownership. In 1970, the average age for marriage was 23. By 2020, it had risen to 27, reflecting a broader trend of delayed life events. The rising cost of education and the burden of student debt also play a role in delaying homeownership. Many young adults are prioritizing paying off student loans before saving for a home. With education costs skyrocketing, student debt has become a significant financial struggle for those hoping to buy a house. With traditional home ownership becoming less accessible, some are turning to alternative solutions. Tiny homes, for example, are becoming a popular way to bypass the high cost of traditional housing. These compact, efficient living spaces provide a more affordable option for people who want to own their own home without the financial burden of a conventional house. Similarly, repurposed shipping containers are being used to create homes that are affordable, eco-friendly, and highly customizable. These creative solutions offer new possibilities for those who are priced out of the traditional housing market. Alternative housing isn't just about affordability, it's also about sustainability. Many tiny homes and container homes are built using recycled materials and renewable energy sources like solar power, making them both cost-effective and environmentally friendly. As traditional homeownership becomes increasingly unattainable, these alternative options could become more mainstream. They offer a way to live more affordably, while also promoting a more sustainable lifestyle. So, what does the future hold for homeowners? If current trends continue, homeownership could be a distant dream for many. Housing prices are rising, wages aren't keeping up, and mortgage policies are becoming stricter. I hope you found this video informative, and now you should understand why the current generation will struggle to own a home in the future. If you want to see more videos like this, leave a comment on what you want to see next, and I'll see you on the next one.